The FBM KLCI surged as Budget 2021 passed the first vote in Parliament. A COVID-19 outbreak is forcing one of the world's largest glove makers to close its factories. Oil prices are at an 8-month high. And what does it mean now that the Dow has crossed the 30,000 mark? The FBM KLCI surged on Thursday after parliamentarians voted for Budget 2021 to pass the policy stage. However, this isn't the end. The budget now proceeds to the committee stage, where more debates and votes await. That said, markets seemed relieved that the political upheaval was postponed for another day, and the FBM KLCI closed above the important 1600 psychological level. Top Glove has been one of the beneficiaries of COVID-19, but now the world's largest rubber glove maker finds itself the center of Malaysia's largest cluster of cases. The company now has to shut down 28 of its factories in stages. Production capacity will be affected while the authorities race to contain the spread among thousands of its workers. Top Glove has on multiple occasions come under scrutiny for its labor practices. The morning after this news broke, Top Glove shares plunged 7.5%. But for context, the stock is still up by over 300% year to date. And it doesn't look like the closures will make much of a dent in the company's stellar earnings this year either. Top Glove said only about 3% of its annual revenue will be lost as a result of it. Unlike gloves, the oil and gas sector has been a casualty of COVID-19. Recall that back in April, oil prices crashed, even dipping into negative territory. But sentiment towards the sector seemed to be improving, with Brent crude trading at about $48 a barrel. A key factor has been OPEC. Members of the Organization of Petroleum Exporting Countries have kept to their agreement to curb supplies. Prices are still negative 27% lower year to date as demand from travel has been decimated, but reduced supply has helped to prop up prices. And the good news for oil is that OPEC now looks likely to extend existing cuts, but we'll see what happens when they meet on November 30th. Plus, like most other asset classes, oil prices have been boosted by expectations that a global economic recovery is near, thanks to growing confidence that a vaccine may soon be ready. This positive oil price momentum also has impact on Malaysian oil and gas players. On a one-month basis, big companies like Sapura Energy and Dayang Enterprise are up by 14% and 45% respectively. From a macroeconomic perspective, oil prices above $40 a barrel is good for Malaysia, a net energy exporter. And in Budget 2021, the Ministry of Finance used an assumption of $41 per barrel for the nation's finances. So, any price above is better for the government, as the nation would have more income. But will oil prices actually remain at these levels? And for how long? On Tuesday, the Dow Jones Industrial Average crossed 30,000 for the first time, a historical moment for US markets. The exuberance and risk-on mode we saw this week was driven by more encouraging vaccine news, as well as the formal start of a US government transition to the Biden administration. This lifted banking stocks like JP Morgan Chase and Goldman Sachs, as well as travel names like American Airlines and Royal Caribbean, sectors which have been hard hit by COVID-19. Even the Russell 2000, which tracks 2,000 of the smallest cap American companies, is charting its best month in history, up by about 20% this November. Small caps are more sensitive to economic downturns since bankruptcies hit smaller stocks particularly hard. So the strong showing by this index signals investors' growing confidence in the broader American economy. Plus, the market seems to like the likely return of Janet Yellen, the previous chair of the Federal Reserve, albeit in a new post as Treasury Secretary, which brings hope for a new stimulus recovery package. Never mind the fact that the US still has high numbers of new infections daily, which has driven consumer sentiment down this month. Investors are pricing in a recovery on the horizon and rotating into the cyclicals. And that's what's been moving markets.